Welcome back to the channel, everyone. Today is November 21st, 2025, and we're diving deep into the whirlwind of activity surrounding Taiwan Semiconductor, or TSM. It's been a roller coaster of a day for the world's most important chipmaker, and if you're an investor, you'll want to stick around as we unpack everything. We've got news on their U.S. expansion, a surprising development on the tariff front, and some broader sector anxiety that's sending ripples through the market. So grab your coffee, and let's break down what's moving TSM stock today. First up, the big headline, TSM's U.S. expansion is hitting some significant milestones, but it's not all smooth sailing. The Arizona fab, a project we've been watching for years, is finally ramping up production of its 3nm chips. This is huge. It marks a critical step in bringing advanced semiconductor manufacturing back to American soil and is a major win for U.S. tech independence. We're seeing a ton of positive sentiment from Washington, with politicians praising the move as a cornerstone of national security and economic resilience. Big tech giants like Apple, Nvidia, and AMD, who are anchor customers for this facility, are also celebrating. Getting these cutting-edge chips produced domestically reduces supply chain risks, a lesson learned the hard way over the past few years. However, the stock isn't exactly rocketing to the moon on this news, and there are a few reasons why. The costs associated with this U.S. expansion are astronomical. Building and equipping these fabs is incredibly expensive, and operational costs in the U.S. are significantly higher than in Taiwan. We're talking about everything from labor to regulatory compliance. While the CHIPS Act funding provided a massive boost, investors are now scrutinizing the long-term impact on TSM's legendary profit margins. The question on every analyst's mind is, can TSM maintain its profitability while operating in a higher cost environment? Some are worried that these U.S. made chips will either be more expensive, potentially affecting demand, or they'll eat into TSM's bottom line. It's a classic growth versus profitability dilemma. Adding to the complexity are the ongoing challenges with skilled labor. Reports are surfacing about the steep learning curve for the new American workforce. Semiconductor manufacturing is an art as much as a science, requiring a level of precision and experience that takes years to cultivate. While TSM has brought over experts from Taiwan to train the local teams, achieving the same level of efficiency and yield rates as their Taiwanese counterparts is proving to be a gradual process. Any delays or lower than expected yields from the Arizona fab could have a direct impact on revenue forecasts, and the market is pricing in some of that uncertainty. So, while the strategic long-term vision is strong, the short-term execution hurdles are definitely weighing on the stock. Now, let's pivot to the second major story of the day, and this one came as a bit of a surprise. We got an announcement of potential tariff relief. The U.S. government has signaled it might be easing some of the tariffs on certain semiconductor-related goods imported from Asia. This is a complex geopolitical dance. On one hand, the U.S. wants to onshore manufacturing. On the other, it can't afford to completely disrupt the global supply chain that its own tech industry relies on. The rationale seems to be that while the long-term goal is domestic production, the short-term reality is that the ecosystem still depends on components and equipment from overseas. For TSM, this is a double-edged sword. Initially, the stock saw a brief pop on this news. Lower tariffs could reduce costs for some of the equipment and materials they need to import for their U.S. operations, which would be a positive. It also eases trade tensions, which is generally good for global companies like TSM. However, the market quickly began to second-guess the implications. Some analysts are interpreting this move as a sign that the U.S. domestic supply chain isn't ready as quickly as hoped, reinforcing the idea that the transition will be slow and costly. Furthermore, if tariffs are broadly reduced, it could also benefit TSM's competitors, leveling the playing field slightly. The initial optimism faded as investors realized the situation is far from simple. The market hates uncertainty, and this move, while seemingly positive, has just added another layer of it. It creates a confusing narrative. Are we all in on American-made, or are we hedging our bets? TSM is caught right in the middle of that strategic ambiguity. Finally, let's zoom out and look at the broader semiconductor sector, because TSM doesn't operate in a vacuum. Today, the entire sector is feeling a bit jittery, and that's putting downward pressure on almost every chip stock, including TSM. What's causing the anxiety? It's a combination of factors. We're seeing some mixed signals about global demand for consumer electronics. After a few strong quarters, there are whispers of a potential slowdown in smartphone and PC sales heading into the new year. Major brands are reportedly becoming more cautious with their inventory levels, and that caution flows directly back to chip orders. Any hint of softening end market demand is a major red flag for the semiconductor industry, which is notoriously cyclical. The memory chip segment, often a leading indicator for the rest of the industry, has already shown signs of price weakness. While TSM is more insulated than memory makers due to its focus on leading-edge logic chips for AI and high-performance computing, it's not immune. If global economic conditions worsen, even demand for high-end devices could take a hit. Investors are getting nervous and are starting to take some profits off the table after a strong run-up in chip stocks over the past year. This sector-wide sell-off is creating a headwind that even a giant like TSM can't easily fight against. When the whole tide is going out, it's hard for any single ship to sail forward. So, to wrap it all up, TSM is in the middle of a perfect storm of conflicting forces today. On the plus side, the U.S. fab is a massive strategic achievement that solidifies its future. But this is being offset by major concerns about high costs and execution risks. The potential tariff relief is a confusing piece of news that offers some benefit but also raises new questions about the overall strategy and competitive landscape. And all of this is happening against a backdrop of increasing anxiety across the entire semiconductor sector about future demand. What does this mean for you as an investor? In the short term, expect volatility. TSM stock is likely to be choppy as the market tries to digest these competing narratives. For long-term believers in TSM's technological dominance and its critical role in the AI revolution, today's jitters might look like a buying opportunity. The long-term demand for advanced chips isn't going away. However, for those with a shorter time horizon, the risks are very real. The path to fully operational, profitable U.S. manufacturing will be long, and the cyclical nature of the chip industry could bring more bumps along the way. As always, do your own research and consider your own risk tolerance. That's our breakdown for today. It's a fascinating and complex situation, and we'll be keeping a close eye on how it develops. What are your thoughts on TSM's future? Are you buying, selling, or holding? Let me know in the comments below. Thanks for watching, and if you found this analysis helpful, don't forget to hit that like button and subscribe for more deep dives into the stocks that matter. We'll see you in the next video.